In line with widespread market expectations, the U.S. Federal Reserve has kept its lending rate steady, while acknowledging uncertainties stemming from Trump's tariff policies. Our Lee Soo-jin starts us off.
The U.S. Federal Reserve has decided to once again keep its benchmark interest rate unchanged, but signal potential rate cuts in future meetings. In its second monetary policy meeting of the year on Wednesday, the central bank kept its key borrowing rate steady at its current range of 4.25% to 4.5%. The Federal Open Market Committee has put a pause in its rate-cutting cycle since December last year after carrying out 3 consecutive reductions. The decision comes as Federal Reserve officials lowered their outlook for economic growth for this year to 1.7% from 2.1% in their December projection.
Uncertainty today is unusually elevated. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals.
The Fed's goals of maintaining maximum employment and low inflation are referred to as its dual mandate. Powell said that the uncertainty comes from the changes that policies, particularly trade, but also immigration, fiscal policy, and regulation, will bring to the economy. The rate-setting committee, which releases a summary of economic projections after its March, June, September, and December meetings, projected slightly higher unemployment of 4.4% from 4.3% by the end of the year. Inflation was also forecast to rise as personal consumption expenditure, a measure of consumer spending, and core inflation, which excludes energy and food prices, were both revised upward. Powell acknowledged that tariffs have already contributed to the rise in inflation. The Trump administration imposed 25% tariffs on steel and aluminum imports last Wednesday, triggering retaliatory tariffs from Canada and the EU, with reciprocal U.S. tariffs set for April 2nd. But with officials expecting the Fed to implement a total of 0.5 percentage point in rate cuts in 2025, 2 reductions are likely this year as rate cuts are typically in quarter-point increments. This latest decision keeps the interest rate gap between South Korea and the U.S. at 1.75 percentage points, with the Bank of Korea slashing its key interest rate to 2.75% in its last meeting in February. All 3 major U.S. stock indexes, the Dow Jones, S&P 500, and the Nasdaq, showed an upward trajectory following the Fed's decision. Lee Soo-jin, Arirang News.